Money is transitory and wealth is permanent. So a lot of people confuse money and wealth. They say, well, I have a lot of money, so I'm wealthy. Well, in the short run, that may be true, but in the longer run, the money can go away, but the wealth is something that prevails. So you look at Warren Buffett. In the last several years, Warren Buffett went out and bought the Burlington Northern Santa Fe Railroad. And he didn't just buy some stock. He bought the whole thing, took it private. What is a railroad? A railroad is nothing but hard assets. It's right-of-way, mining rights adjacent to the right-of-way, rail, rolling stock, yards, switches, signals, buildings. It's all hard assets. How does a railroad make money? It makes money by moving hard assets. So a railroad is the ultimate. It's hard assets, moving hard assets. It's the ultimate hard asset play. Warren Buffett's next deal was to go out and buy massive natural resources in oil and natural gas. And by the way, he can move his oil on his own railroad. He doesn't need the Keystone Pipeline. You line up 100 tanker cars, that's a pipeline on wheels. So Warren Buffett comes with his own railroad. That means he has his own pipeline. So Warren Buffett's a guy who's dumping paper money, getting into hard assets in the form of transportation and energy in particular. And the dollar could go to zero and it has no effect on him. He still owns a railroad. The other example are the Chinese. The Chinese have spent the last 4 years acquiring approximately 3,000 to 4,000 tons of gold. And how do we know that? We have some hard data. We know Chinese mining output is about 450 tons a year. We know Chinese imports through Hong Kong are coming in between 800 and 1,000 tons a year. This has been going on for 4 years, so that's kind of 6,000 tons there. And where you have to use a little guesswork is, okay, we know how much gold China's getting, how much is going to private consumption, how much is going to the government. We're not as clear on that, but I use kind of half as a first approximation. And we also know that China's acquiring gold through stealth, using intelligence and military assets to bring gold in completely off the books. Doesn't show up in Hong Kong imports. So why is China doing this? Well, because they've got a mountain of paper assets. They've got $4 trillion in reserves, almost all of it denominated in paper bonds, most of that U.S. dollars, most of that U.S. Treasuries. China's acquired 10% of all the official gold in the world in the last 4 years. So why are they doing that? Well, they now have a hedge position. So they actually want a strong dollar because they own so much dollar-denominated paper. If the dollar's strong, they might not make very much on the gold, but they'll collect the value of their bonds. But if we inflate the dollar, which we're trying to do, and the value of those bonds goes down in real terms, we know what's going to happen to gold. It's going to go up like this. So they've created a hedge where they win this way and they win this way. So I would say look at China buying gold, look at Warren Buffett buying hard assets and energy, and that will give some guidance. The two of the most powerful, biggest, best informed investors in the world are getting out of paper money into hard assets.